All right, guys, we are back. Welcome to another episode of Sensible Investing. My name is Jesse, and today we are joined by my good friend, Mr. Gift Horse over here. And he is joining us because he is feeling generous and he wants to bring us some deals. So, today, what we're going to be doing is we're going to be talking about 4 stocks that have fallen 60% or more in the last, say, a month, a week, half a year, right? So we're talking about 4 stocks that are down 60% plus in a very short space of time, all right? And guys, just a full disclosure, I am long 3 out of these 4 stocks that we're going to cover in the video today. And the fourth one I'm actually looking to get back in, which is one that I sold 2 or 3 weeks before everything turned to poop. All right, guys? So what we're going to do in today's video is we're going to cover the key points why I believe that these 4 stocks, which are down 60% plus, are great businesses and will do well when things revert back to normal. But if anybody wants me to do a deep dive analysis on each stock, make sure you leave a comment below letting me know which one you'd like, and then hit the subscribe and like button so that as soon as I finish the research on the particular stock, you will be notified straight away when the video is up. Okay, guys, first stock, Ulta Beauty. What a great company, all right? And I know that a lot of my viewers and followers probably aren't familiar with Ulta Beauty or the company. However, if you take just a little bit of time to have a look at some of their key brands, we're talking Tarte, Kylie, Elf, ColourPop, okay? These key brands that millions of women love who flock to Ulta in droves just to line up and get the latest collection, okay? If you guys have a look into these brands, especially because they are exclusive to Ulta, you'll see why I'm so bullish on the company. So let's just look at Kylie's brand, right? I'm sure everybody is familiar with Kylie Jenner. I just did a quick YouTube search for videos that were uploaded this month regarding Kylie's beauty products, okay? 1 million views, 500,000 views, 172,000 views in a matter of weeks and days. Absolutely massive, okay? The amount of women that are buying and consuming this makeup and content, insane, all right? Same thing can be said for the Tarte brands, okay? 3 months ago, 1.2 million views, 1.5 million views. Same thing can be said for Elf Beauty, okay? And if you guys aren't familiar with this chat over here, Jeffree Star, he's probably unarguably the biggest name in makeup, in my opinion, based on my research again, right? So, again, have a look at all these brands, 10 million views, 1.1 million views, 500,000 views, okay? And same thing for ColourPop, right? 5.2 million views in 2 weeks, 1.5 million views in 3 months, okay? This is no joke. And what's even more interesting is that you think clothing, handbags, and shoes are a necessity or of everyday life for women. Believe it or not, it's actually makeup. And furthermore, in the last 2 to 3 years, the trend is now moving to natural beauty, right? We're talking about the no makeup look. We're talking about the organic beauty, body positivity, all of that, right? So it's gone from clothing, accessories, to makeup, to now organic makeup, skincare, wellness, all of that, right? So the trend is heavily favoring, as you can see, these consumer discretionaries that people buy, use up, refill, continue to buy, and it's increasing, right? Furthermore, Ulta has gone from a company that is what you can say is pretty sort of, below average tier makeup selling, we're saying selling proprietary branded stuff, mass market makeup and cosmetics, to somebody who's now dethroned the queen of makeup, Sephora, okay? And as you can see on this trend over here, in the space of 2 short years, heading on 3, they have now taken the top spot from Sephora, who have been known for makeup for many, many, many years, right? And they have taken the top spot to become all things makeup and beauty, skincare, etc. under one roof. And don't just take it from this graph over here, have a look at some other sources, right? And in the space of 2 short years, Sephora has fallen, where Ulta is now the #1 beauty destination among millennial women. So we're talking women between the ages of, say, 18 to just a little bit under 40, okay? And same thing can be said from another source. Again, this is Vogue Beauty. This is the home of anything to do with beauty, fashion, makeup, whatever, right? And again, Ulta has dethroned Sephora to become the #1 makeup destination for women in United States and soon to be North America. If you take some time to actually track their things like Instagram comments, Twitter comments, and what the community, right, and what the buyers are saying on YouTube, social media, and everything else, again, you'll realize that Ulta is, easily the favorite destination among these women who are absolute, just beauty, makeup, and skincare enthusiasts, all right, guys? And looking at these numbers from an initial view, some of you guys might be saying, well, they were growing, but, what's going on? The comparable sales for beauty and cosmetics are down to now low single digits. And yeah, skincare is growing quite aggressively, but the majority of their revenue is coming from makeup and cosmetics. And I would say from a high-level view, you guys are right. However, we have to look at this in context, okay? Keep in mind, the entire category for prestige beauty and cosmetics and the likes were actually down year-on-year 7%. So the entire category was down in the high single digits, and the skincare and I guess wellness and skincare beauty category is up high single digits, okay? But compare that to Ulta. Even when the whole market and the whole category is down, they are still up, okay? Down 7%, and they are still up sort of, 2, 3, 4, 7%. And while skincare is growing at 7%, the whole category, they are up 18, 23, 19, 29%, okay, guys? And so what this again tells me is that this is a very smart management team who know their marketing, who know their customer base, and are clearly growing faster than the category, which again is another bullish sign. And as we see the money move from prestige beauty and cosmetics into organic beauty and the no makeup look and skincare, I do believe that there will be no cannibalization of revenue, whereby it'll just funnel into the sort of next trend. And based on my analysis, I genuinely believe Ulta is ahead of the trend in terms of capturing the demands of their customers. People will buy more makeup and smaller ticket items if we have a recession. And that's something called the lipstick effect, where people can't handle the pain of giving up what they love, so rather than give up what they love, they would rather buy something that they can afford, which absolutely isn't a necessity, okay, guys? And keep this in mind. For me, and well, I don't wear any makeup, but it's not a necessity. But for women, especially during depressing times, when times are hard and things are bad, they would rather have little indulgences, such as, even if it almost breaks the bank, living paycheck to paycheck, they're not indulging at all, okay, guys? And today, Ulta Beauty is $146.99, and that's at the time of making this video. It'll probably change by the time you watch it, but keep in mind, they were a $360, $370 stock only about half a year ago, all right, guys? And so, like I said again, I believe that once everything goes back to normality, Ulta's going to do very well, and that is why they are stock #1 on this video today. All right, guys, stock #2, Pinterest. Again, probably a stock that not many of you have heard of, or maybe have heard of, but went, oh, I thought the main social platforms are Facebook and Instagram, and Pinterest, or what do they do, what are they? And in short, the reason why I'm so bullish on Pinterest, I think can be summarized on this table below, and just have a look at the reasons why people use Pinterest, okay? And have a look at it compared to all of their peers. So we're talking Pinterest, Facebook, Instagram, Twitter, etc. And you can actually see that the second primary reason why people use Pinterest is to actually get inspiration or go shopping for products, all right, guys? And you guys might be thinking, well, that's absolutely crazy. Why would people do that? Well, let's talk about that in a little bit later on, but let's have a look, okay? And this is not just from one source, okay? Two sources, an eMarketer, which I think is probably one of, if not the most reliable source when it comes to getting insight into things like social media, trends, etc., again, have a look at this, okay? People would kill to have an audience as engaged as the ones on Pinterest. 48% of them are trying to find products and shopping, okay? So they are at least almost 5 times more effective in terms of getting an engaged customer buyer base, an engaged user base that's actually already actively shopping for something, which is absolutely insane. But I'm sure that the majority of you hate ads. Well, not Pinterest, right? 10% for Instagram, 14% for Facebook, 4% for Snapchat, 7% for Twitter, and 48%. So pretty much half of all of their users are on there going, hey guys, sell me something. I want to buy something. And going back to what I was saying before about, well, how does Pinterest do it? Well, take a look at this little ad, okay, from Farmers Insurance. And you probably won't notice it's an ad because it's like, oh, top 5 things to do before selling your home. And, you know, use a pinch of salt in your laundry to help your clothes maintain your color. I mean, that just seems like very useful, helpful advice for people, you know, just trying to live their everyday life. And that is exactly why Pinterest are in the position that they are. The posts that they have, it's effectively a clip art board or a, you know, it's almost like the Tumblr, but for people that want to do something, want to buy something, or have an idea for something, okay, guys? So have a look again, these drinking game pins, okay? 90% of them will be branded pins, okay? You've got people, for example, a vodka brand that will come on here and say, hey guys, why don't you play some drinking games? And people will go, yeah, great, I want to play some drinking games. Well, if we're going to play some games, we need something to drink. And then boom, that's how they get you, right? So going back to what I was talking about before, that is why almost half of their users are actively and ready to buy, which, again, like I said, you know, advertisers would envy to be in this position. This is a very, very underpenetrated area, okay? They've got an engaged user base, and a lot of people are still asleep at the wheel in terms of what actual potential this platform can bring. So 97% of searches are unbranded, and 76% of people that use Pinterest, they save items to purchase later, okay? Now, I'm not saying they'll buy all of these items, but it will be fresh in their mind. And again, you know, when they need to find something else, because people don't just go on and get one thing, they're going to be thinking about other things on Pinterest, okay? And their audience is a very, very attractive demographic. And it is the demographic of women between the ages of 25 to 44 who are very, very high income and very well educated. As our technology gets better and people continue to invest into technical capabilities, you'll start to see the rise of visual searching. So rather than going to somewhere and putting in a word, people will take a photo of something that they like, and then bang, they get something that looks similar-ish, or, you know, right? So, for example, you see that person wearing that cool jacket or, you know, whatever. Take a picture of it, upload it to Pinterest, boom, okay? You've got things like augmented reality, people that can actually try on what a makeup product looks like in real life. You don't need to sample things anymore, right? You can just do it in the comfort of your home, which is great if everybody's under lockdown and quarantine and they can't leave the house, but they really want to get that product they want. Well, now you've got try it on. And going back to that comment that I was talking about before, you can see here people aren't just on Pinterest to do one thing. And the beauty of this is that there are so many events and so many things that overlap with each other, as you guys can see over here, that people will easily get lost in the weeds and easily get lost in the rabbit hole. And so there's a term called the Pinterest rabbit hole, or you can pretty much say this for any social media, right? You can say this for the YouTube rabbit hole. You can say this for the Instagram rabbit hole, the Facebook rabbit hole, whereby the algorithms, based on the way that you engage and interact with the posts, the pins, the videos, will recommend you other videos in the to watch or recommended list. And I can tell you right now, you know, the majority of you who use social media, or whatever it is, you will then go and click on a recommended video. Maybe you found my video via one of the recommended videos. So you can see over here the average revenue per user. It's been growing quite steadily, but as you can see, it's slowed down a little bit in terms of in North America or the United States, but still growing at about a 25% clip. And I think that that should still grow based on my research at that clip for some time. But what's interesting is you can actually start to see that this is starting to take hold and gain a lot of traction internationally, where you saw a massive spike in ARPU, up almost 120-30% from the comparable quarter last year, okay? And you guys can see that over here they've guided up to $1.5 billion of revenue. Again, you know, we're talking sort of almost 40% revenue growth year on year. And yet the stock is trading below its IPO price, okay? So we're talking the stock is 50% below their IPO price and almost 70% down from the price that they were trading at only about 6 months ago, all right, guys? And I know that some of you guys might be saying, well, it's not a profitable company, so, you know, of course it's going to go down. And to that I say, look, guys, if you're investing for the right reasons and you're investing in what's going to keep your users coming back and the total lifetime value of your customer, then I don't think that's a problem at all, okay? And they're getting heavily into video, and I'm sure you guys know video costs a lot more to host and whatnot, you know, than static images, all right, guys? And furthermore, they have a beautiful balance sheet, absolutely no debt, right? We're talking $1.6 billion of cash and cash equivalents and absolutely no debt. And I don't see this whole sort of, you know, situation lasting longer than about a year, probably not even 7-8 months. Okay, guys, stock number 3, Auckland Airport, all right? And, you know, for you guys, long-term buy and hold, 30, 40-year value investors, you know, you guys are going to absolutely love the stock, all right, guys? And you're talking about an airport. Why? Okay, we're going to have a GFC soon. The people, it's not that they don't want to fly, it's because everybody is shutting down flights, right? Before the government announced shutdown, you still had many, many people flying to New Zealand, okay? Many people flying to New Zealand because more and more people are finding out about the country and they absolutely love it. And that's why they're coming. I mean, just take a look at here. Back in 2009, during the GFC, the Great Recession, the number of people visiting New Zealand only decreased by not even 5%. All right, guys? And this was when, you know, the sky was falling and everything was supposed to fall over. And yet, the number of people only decreased by not even 5% to quickly recover the next year and continue up, okay? And look at everything, right? The avian flu, the SARS outbreak, you know, Auckland Airport has done absolutely fine, right? And you guys might be wondering, well, you know, surely there's not only one airport in New Zealand, so why Auckland Airport? And the answer to your question is because it's pretty much the closest thing that you can get to a government-backed monopoly. And the reason being is because, you know, 45% of an entire country's population is centered around this little landmass over here in the North Island. For them, their only option to get in and get out of the country, unless they want to drive, say, 6 hours that away, is Auckland Airport. 75% of all international flights to an entire country goes to Auckland Airport, and 94% of long-haul flights, all right, guys? So if that doesn't scream a monopoly to you, you know, I don't know what does, because if you actually look at who owns the majority of the shares, you're talking about the city of Auckland, okay, guys? So you have effectively got a government-certified, government-backed monopoly that people don't have an option of other than to use this. Whilst you've got other countries and cities like Beijing and Sydney needing to build a second airport in order to cope with the number of people coming in because they just don't have enough space, you have Auckland Airport building a second runway, all right? So whilst other cities are building a second airport, which will compete, right, and remove the whole monopoly, Auckland Airport just goes, well, we'll just make our monopoly larger by building a second runway so that we can have more planes coming in and more people coming into the country. All right, it's absolutely ridiculous, okay, insane. And the reason why they can do this is because they have 1,500 hectares of freehold land, all right? And furthermore, the other reason why I'm so bullish, we'll talk about Queenstown very shortly, okay? But if you guys want to know what 1,500 hectares of freehold land looks like, that's 2,803 football fields, okay? And again, for all you deep value investors who love a massive wad of just untapped hidden assets on the balance sheet, you got 2,800 football fields just sitting there waiting to be developed, okay? So not a problem. They can handle all the people the world throw at them and then some. All right, guys. Now, in terms of Queenstown visitors, this is known by many and will continue to be known by many as globalization happens, and New Zealand's reputation keeps on going as that sort of mystical dreamland of hobbits and Lord of the Rings, and everybody starts coming. It's only going to get more popular. And based on 19.8 million passengers arriving annually to Auckland and 3 million a year going to Queenstown, we're talking about 1 in every 7 people go to visit this beautiful, adventure capital of the world. And the only way that you can get a stake or exposure to this sector is through Auckland Airport. Funny that, another monopoly. Have a look at the growth of this. Okay, you've got international passengers coming, and they're increasing by 25%. Yet the number of airlines serving Auckland are increasing by 67%. And again, that's because it is a monopoly, right? The other airports in New Zealand, they cannot handle this. They don't have the infrastructure, they don't have the land, they just don't have it, right? And again, this is another bullish tailwind for Auckland. The other beautiful thing is, if you actually look at, now I know you guys can say, look, China's in an absolute mess right now, but they will recover, okay? They will recover. And so as a result, you not only get sort of your retail people that fly, okay? We're talking about air freight, air cargo. The amount of cargo over the last 6 years has almost increased 8-fold at a compounded growth rate of 41%. And that's because, Chinese consumers, they have a massive distrust for anything Chinese, right? So they want Kiwi, they want Aussie, right? So if somebody was to ask me what's the best ETF to get exposure to New Zealand, I would say just buy Auckland Airport. And the reason being is because you've got aeronautical, right? You've got retail, which is consumer discretionary. You've got car parking, which is infrastructure. You've got an investment portfolio of almost $1.5 billion with a lease term of almost 10 years. All right, guys, 10 years of the portfolio is already leased under long-term contracts, delivering a $90 million a year rent roll, right? You've got an entire hotel portfolio, which isn't doing very well at the moment, but when things recover, and you bet they will, it's going to, the pent-up demand is going to explode, right? And then, like I said before, you've got a stake in Queenstown Airport that you cannot get unless you invest either privately or through Auckland Airport. So massive, massive monopoly, right? And another tailwind going for Auckland at the moment is, if you have a look at the projections, we are talking about a potential doubling of the population, I guess sort of in the mid case. So almost doubling in the next 20 years. And again, that's just going to compound on the number of people already needing to come through Auckland because they have no other option. Massive tailwind, great monopoly, and what a better stock to have your government back you, right? And what I mean by that is, I think the New Zealand government, in terms of debt to GDP, and just how sort of sensible they are in terms of their, I guess, finances compared to all the other countries in the world, I think that they're probably the most responsible, or one of the most responsible countries. And so as a result, again, I think that the margin of safety is high. All right, and today Auckland Airport is trading at $4.76, down from almost $10 just a few short months ago. All right, guys. Fourth and final stock of these stocks is Canada Goose. All right, and this is a company that I have been in and out of a little bit. And I actually sold out of this about 2 or 3 weeks before everything turned to custard. And I have been watching very closely, looking forward to buying back in. And the price is starting to get very, very attractive. All right, guys? They have dropped below what they IPO'd for back in 2017. Okay, so 3 years ago, they IPO'd for $17.23. At their highest, they went to about $65, $70, and now they're down below the IPO price. Absolute insanity. And the reason why I'm so bullish on Canada Goose is because I see a lot of similarities and similar qualities as to Lululemon, all right? And this man over here, Danny Reese, I think he's an absolute fantastic CEO. He's built the company from $3 million to $1 billion, and he's still running the company as the CEO today, all right? And he did this when he was at a very young age of about 30-something, which is absolutely impressive. He's also really good friends with the CEO of Lululemon, and the reason why I think they have a lot of similarities is because they're really setting some trends, right? Athleisure, so yoga pants, activewear, people just wearing them everywhere. that trend was largely started by Lululemon. And what Canada Goose has done is they've taken a trend where people wear these big, heavy parkas to go exploring Antarctica. They have now become fashionable, okay? And so I think that they have some very, very savvy marketers over there working for them, which is, again, why I'm so bullish about the company. Many, if not all retail shops are closing their stores in North America for, 2 to 4 weeks, okay? But name me one CEO that has foregone their salary, and I'm talking about retail. Okay, I'm not talking about airlines, because airline CEOs are taking a pay cut because they are on the brink of extinction. Whereas you've got a CEO here that's foregoing his salary for at least the next 3 months, despite the company doing very well, good healthy balance sheet, very, very low expenses, because they have a huge direct-to-consumer and e-commerce business. And if you guys are interested in a full 45-minute deep analysis into Canada Goose, I will include a link in the video description below. All right, guys, so that is the end of the video. I hope you enjoyed it, and looking forward to your comments. And until next time, happy investing. I will catch you in the next video.